Se están relajando mucho ahora mismo las cosas. Y para darle una visión internacional a este dato de IPC, que ya saben es de Estados Unidos, tenemos a Jay Peloski, founder at TPW Advisory. Jay, good afternoon. Thank you so much for being here.
Happy to be with you. Thank you.
CPI inflation in the United States is down to 5%. Do you think this is a continuation of the disinflation that Powell spoke about?
Yes, it seems to be the case. Not only is the year over year down to 5%, but I think more importantly, the 3-month annualized headline CPI is roughly 3.8%. So even better, suggesting that the more recent period of time, 3 months versus the 12 months, inflation is running, not quite at the Fed's target level, but definitely getting closer.
Jay, Fed minutes today, this afternoon. What should we expect about these minutes?
That's a good question. I haven't really given it a whole lot of thought. I don't think it's going to be particularly market moving. I think there's a growing sense, not so much from the minutes, but recent Fed commentary about a little bit of division within the Fed about whether there's more rate hikes necessary or the Fed should consider pausing. Obviously, the bank issues around Silicon Valley Bank, its signature bank, roughly a month ago now, caused some concern about potential risk to the banking system if the Fed continues to raise rates. And so I think it's going to be a close call. I mean, our view is that the Fed is not going to raise rates in May, but they may raise rates 25 basis points. That's quite possible. But I think pretty clearly the sense is that after the May meeting, the Fed is going to go on hold. And then the question is, will they cut rates as the market is expecting them to later on this year? Our view is that they will not cut rates late this year because the economy in the U.S. is not going to go into recession.
So, Jay, when do you believe that the Federal Reserve is going to cut rates? I believe it's next year, 2024, but do you have any idea of which time exactly? Could it be at the first half of the year, second half?
Yeah, no, that's a good question. To be honest, again, I haven't really given it a whole lot of thought. I think the issue is this year or next year. The market is pricing this year. The Fed is saying next year or later. We would be in the same camp with the Fed. I think the market has really gotten this recession view, is firmly in the minds of investors, particularly after the bank issues of a month or so ago, and that's what the market is pricing in. Interestingly, if you look at stock analysts in the U.S. and second half earnings expectations, the expectations are for earnings to increase in Q3 and Q4 in particular. So there's a disconnect right now between bond investors who think the economy is going to be weak and the Fed will need to cut rates, and stock market investors, or at least analysts, not so much the investors. So the sell side of the street is saying earnings are going to be good in the second half of the year. And so that, I think, is the interesting tension that we have to watch between stocks and bonds as we move through the year.
Jay, I also wanted to ask you about what Wall Street banks are already warning about of what's happening in the commercial real estate sector. Do you think this is the next big problem in the banking sector?
No, I don't. I think that's way overhyped. The commercial real estate sector has years before they have to mature a lot of their debt. There's all sorts of numbers about maturities and big numbers like $1 trillion of CRE debt coming due. I think the reality is that commercial real estate is a very slow-moving process, right? It's across the whole country, multiple different cities, multiple different business centers. It's not kind of like all of a sudden crash-type material, in my view. There's a lot of data out there that suggests big banks are not really that exposed at all. Regional banks are exposed, but not to the level that some people have worried about. So to me, no, I think that's more fear-mongering and is not really going to prove to be a problem.
Jay Pelosky, founder at TPW Advisory, thank you so much, as always, for being here this afternoon in Negocios Televisión, this morning for you.
It's a pleasure to be with Negocios. Thank you.
Bueno, y nosotros, mientras tanto,